Everyone, and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let's dive in. We will begin our review of global economy with key releases in the US, Europe, China, and India. In Europe, the Eurozone's economic growth in the third quarter was confirmed at zero. German inflation eased in November, and German industrial output fell for the fifth week in a row. China's exports continue to expand, and the United States trade deficit declined. The U.S. economy added more than estimated jobs in November and higher than in October, indicating economy's resilience and raised the prospect of Federal Reserve engineering a soft landing. The U.S. goods and services deficit rose in October from the previous month after exports edged lower and imports edged up slightly. Exports declined 1% to $259 billion and imports rose 0.2% to $323 billion, resulting in an increase of 5.1% in the deficit to $64.3 billion. China's trade surplus rose substantially in November after exports rose and imports fell unexpectedly in the month. Crude oil declined 5% in the week after the U.S. supplies rose to 6 million barrels a day in the global markets, and the demand growth uncertainties weighed on the market. We now turn our attention to the developments in global financial markets. The yield on 10-year U.S. Treasury rebounded from a 3-month low in Friday's trading after the U.S. added more than expected jobs in November. Gold hovered near $2,000 mark on the persistent bet that major central banks are more likely to begin lowering rates as early as the first quarter of 2024, despite the U.S. adding more than expected jobs in November. Crude oil fell 5% this week amid signs of rising U.S. exports and weakening demand from China. Natural gas prices in Europe fell below €39 per megawatt hour and declined for the 8th week in a row, despite the slight uptick in withdrawals from the storage because of inclement weather across the euro eased to $1.07, the level last seen in the mid-September, after investors shifted focus to the U.S. dollar following the non-farm payroll report and ongoing worries that the ECB may lead other major central banks in lowering rates in 2024. The yen rebounded to 144 against the dollar, a 3-month high after the Bank of Japan Governor Kazuo Ueda signaled that the central bank may be prepared to abandon its ultra-loose monetary policy earlier than expected. The S&P 500 index and the Nasdaq Composite extended gains for the 6th consecutive week, and the larger-than-expected U.S. job additions indicated that the Federal Reserve is more likely to engineer a soft landing. European markets extended gains for the 4th consecutive week, and the DAX index traded at a new record high after the German trade surplus soared and the Eurozone economy avoided a downturn in the third quarter. The Nikkei 225 average fell in Tokyo after the GDP unexpectedly contracted in the third quarter amid worries that the Bank of Japan may abandon its ultra-loose policy earlier than expected. China and Hong Kong stock market indices struggled for the third week in a row after the ongoing property market woes offset the increase in trade surplus in November. India stock indices soared after the Reserve Bank of India held steady its key lending rates for the third time and lifted its annual GDP growth outlook to 7% from 6.5%, but the central bank cited inflation risks. We now review the latest earnings releases. Merger deals and several retailers and technology companies dominated the headlines. Alaska Air Group, the regional airline, agreed to acquire the rival Hawaiian Airlines in a deal worth $1.9 billion or $18 a share to the airline and assumed $900 million of the company's debt. Spotify technology jumped after the music streaming company announced its plan to lay off 1,500 employees or 17% of its staff. GitLab soared after the software developer reported better than expected quarterly results, and the company reported adjusted operating profit for the first time. TUI AG surged after the UK-based tour operator reported operating profit that more than doubled in 2023. Chewy declined after the online pet food and product store reported weaker than expected revenue, and the company swung to a loss in the quarter. Dollar General, the deep discount retailer, reported better than expected quarterly results and reaffirmed its fiscal year outlook for earnings and comparable sales. Broadcom, the chip maker, reported better than expected quarterly results. Lululemon Athletica, the specialty apparel retailer, reported quarterly results and issued a weaker than expected holiday sales outlook. DocuSign, the online service provider, reported higher than expected quarterly earnings but offered a muted outlook. The Cooper Companies, the contact lens maker, reported rising revenue and earnings in the latest quarter and halted its semi-annual dividend and announced a 4-to-1 stock split. Carrier Global jumped after the company agreed to sell its Global Access Solution unit for $4.95 billion in cash to Honeywell. Anglo American dropped after the company announced a plan to lower its production and trim capital expenditure in a bid to cut costs. Looking ahead next week, economic news is expected to dominate headlines again, and few companies are scheduled to release earnings. Investors are anticipating the U.S. Federal Reserve, the European Central Bank, the Bank of England to hold rates, and monetary policy decisions from the central banks of Brazil, Norway, and Switzerland are awaited. Investors are looking forward to inflation, retail sales and factory orders reports in the U.S., the euro area trade balance, and China's industrial production, retail sales, and housing prices. You can read daily U.S. and global financial market news, earnings calendars, stock movers, and economic updates on ticker.com and 123jump.com. You can also get the latest financial books on Redera.com and keep up with financial industry events on eventsinamerica.com. That is all for today, and we will see you next week.